let's say, okay, Bitcoin goes to 1 million this cycle. It's a stupid cycle. It all gets out of control. Massive bubble. Could we skip a cycle? That's possible. Could we fall 75%, rally, don't go the new high? We've seen NASDAQ skip a cycle. NASDAQ skipped a cycle. We'd have to see a full-blown bubble cycle. My guess, that's the next cycle. I think that's the whole everything AI, ridiculous, everybody knows the game, bubble cycle.
Bitcoin and AI could see massive gains in the next cycle, according to Raoul, CEO of Real Vision. While Bitcoin hitting $1 million this cycle might trigger an unsustainable bubble, Powell suggests an alternative scenario where the real explosion happens in 2018, the next cycle, driven by major trends like AI. Stick around for his full market analysis, and don't forget to like and subscribe for more finance insights.
So that is the global liquidity, right? And that's, or we use Fed net liquidity is another one. Either way, or financial conditions, even better. Financial conditions that we use are basically rates, the dollar plus oil. Those are the kind of three variables that really matter for the global economy. Oil has been falling, so that's dampened the issue somewhat, but the dollar screamed higher, as did rates. Now, that has a lag on the economy. So we're talking about it having a lag on crypto. We probably see a slower economy in Q1 or Q2 than people are expecting, which plays into the idea that you've got is, I think the market is underpricing cuts now by the Fed, and they kind of go through this madness every time this happens. They're like, well, it's one and done, or well, it's just a little bit. They're never going to do it. And then eventually they have to, because they've got to roll $10 trillion of debt, as does every other country in the world. And financial conditions are far too tight for the Chinese. If the Chinese don't get their economy going, we have no export market. We've got no bar of treasuries. You know, Europe is struggling as well. Germany's in a total mess. So we need to ease financial conditions, and they all know it. And they've had to hold on as long as possible because inflation had been higher in the previous cycle, and it cost everybody the election. Every government across Europe, pretty much around the world, that was in over COVID got voted out. Why? Because prices went up so much on people. So they're very nervous about that. But we've now got a new regime. So I think you're right. I think the probability is the economy is weaker than expected, and that gives them the green light that they've been after forever. This is very similar to the 2016-17 cycle. Rates went up once in 2016 and then stopped. Didn't go up again. In fact, the Fed didn't even put any liquidity in, but the Chinese had to because the dollar had been too strong prior, so they really had to stimulate. And then the Europeans and the UK then had Brexit, and they started simulating. So the US didn't need to be doing it. Same in 14 and 15. I mean, rates didn't move. There was a bit of QE that came out of Europe, obviously from the banking thing, the Draghi, everything it takes. But then after that, crypto, the amount of movement in crypto doesn't need a massively large total amount of liquidity. People just over-focus on the Fed, over-focus on balance sheets. Just as long as global liquidity keeps rising by 8%, crypto will still do 100% a year. It's kind of, so I worry less about it. I think, again, people have an anchoring bias on the last cycle, but having seen three of them, the last one was the outlier, and crypto went up less and finished earlier. So therefore, that kind of doesn't make sense if it's just the liquidity cycle. I think a lower volatility cycle in terms of the economy actually creates more risk-taking than a higher volatile cycle like COVID.
We might have the final easy cycle and then perhaps have a copycat of 1929-ish where all of a sudden the debt bubble bursts.
What they learned in 2008 was a very simple trick. Debase the currency and the asset optically goes up. That was the whole Draghi thing. That was everything. So we cannot do that because we know the mechanism, the US, that is. You know, can it happen individual countries, whatever, yes, but not the US because it has the reserve currency, it has the fiat currency. So the 1929 scenario cannot happen. It simply can't happen. We've taken that left tail out. However, let's say, okay, Bitcoin goes to 1 million this cycle. It's a stupid cycle. It all gets out of control, massive bubble. Could we skip a cycle? That's possible. Could we fall 75%, rally, don't go the new high? We've seen NASDAQ skip a cycle. NASDAQ skipped a cycle. We'd have to see a full-blown bubble cycle. My guess, that's the next cycle. I think that's the whole everything, AI, ridiculous, everybody knows the game, bubble cycle.
Singapore has emerged as a global crypto leader, driven by clear regulations, strong infrastructure, and tax incentives. With 40% of investors holding crypto and major firms like Coinbase and Ripple licensed, the city-state is paving the way for global crypto adoption and economic growth. Now back to Raoul Pal's insights.
Why are the coming years so important in your view?
Because of what I term the economic singularity. So how economies work, once you understand this, you understand why we're in the mess we are, what's going on, everything, is GDP growth, trend rate, is driven by demographics growth, so population growth, productivity growth, plus debt growth. So if we think about Europe, where you are, we have aging populations. We tried to import labor, but in every country in Europe, they're like, whoa, this is too much because we've got this old population and the society pushes back against too much immigration in one go. So we're kind of stuck at this thing, right? And as you get older, you become less productive. So these rapidly aging populations, just look at GDP and look at the trend rate of GDP and look at the age of the population. Japan, the slowest, Italy, country by country by country. It's that. And the US is better because they've got a younger population. Okay. What I then found is the labor force participation rate, i.e. the number of people in the workforce, as a percentage of the total population, that keeps falling over time because people are retiring. But when you invert debt to GDP, it's the same chart. So debt growth has just been a function of demographics, trying to support an economy of aging people, and that's every country in the world. Same thing. Okay, so we're in that trap right now, and we've got all this debt that we built up that we're just rolling. And we're increasing the debt just to pay the interest. That's the game. It's not from government borrowings in excess. They're not doing huge infrastructure spend. It's just servicing debts that keeps raising the debts. So that's creating this liquidity and debasement of currency. It's the servicing of the debt because they don't want it to go bust. You can't let the collateral go bust because the system's too levered. Everything goes to shit. It's a down 90% of everything and it's the end of the world. So they're not going to let that happen. So we're in this cycle until something changes. So you hear Scott Bessent, the new Treasury Secretary of the United States, saying, we've got one chance, and that's to try and grow our way out. Okay, fine, because GDP growth is the economic activity that pays the interest. Don't forget, the private sector's 120% of debt to GDP as well. So it's kind of totally screwed up. But the question is can you sustain it with an old population? It seems provably not. Can you shift it a bit? Maybe. But in 10 years' time, something like that, 5 or 6 years' time, we've got a new thing to compete with, which is the rise of AI. And AI is basically human knowledge, but at an infinite scale. We can create endless. We're already seeing how fast, these very early crappy agents on Twitter are, but they're going in their thousands, like meme coin proliferation. So we're going to create unbelievable amounts of AI, which is human knowledge, and the applications that make it easy for us to use. So then we don't need knowledge workers, doctors, lawyers, radiologists, whatever it may be. And then the robots. Amazon now employs more robots than humans, and that's only going to keep accelerating. So that means we're going to get infinite humans or replacement humans, which means if you think of the formula, If population growth goes infinite, what the fuck happens to GDP? It goes through the roof. But who does it accrue to? The agents, the AI companies, who? But it's not the individual. Then you've got productivity. So a lot of people argue that Europe is wasting money by all of its green energy stuff. I don't think it is. I think it's a calculated decision to increase productivity in Europe. Is one of the simple ways of doing it without changing the population side is lower the cost of electricity over time. And so if you do that, you get more productivity, you can have growth. And growth will stimulate the economy. This was the playbook in the 1950s. In the 1950s, we had the massive debt from World War II, financial repression, which is debasement of currency, gradually over time, massive infrastructure spend, eventually grow your way out, technological revolution, late 60s, 70s happen, etc. And a population boom, which we don't have. Well, we do have. It's going to be robots. So after that, when AI is everywhere and we have an age of abundance, what is money? What does money buy us? What are jobs for us? What does it mean to have a business? People made all their money in SaaS businesses, but a SaaS business is just a kind of front-end software that sits on the internet. And if you just give it to a powerful AI and say, build me this, within a year from today, we'll be in a system that it can copy anything, build any website. If you say, hey, Michael's built a really cool DEX and it's really different, I just give it to my AI and say, hey, copy Michael's DEX, but do it in Hindi because I think the market's bigger. And it'll say, no, don't do Hindi, do Indonesian because it's an underserved market. Off we go. Right? So you have no moat around any business anymore, unless it's a physical thing or a hardware manufacturer. Hardware manufacturers, look at Tesla, they're using robots. So it's a very complicated world. What are markets when you've got AGI? AGI is coming, whether it's in the next 2 years, 5 years, it's here. So if Moore's law dictates that computational power doubles every 2 years, what we're seeing is intelligence at AI level is doubling every year. So by next year, we're at 120 IQ now. Next year it's 240, then 480. Okay, this is la la land. What are financial markets? This is going to do better than us. There's no point in us trying to trade. So, okay, fuck. This is a big issue, but I kind of think this is all going to end in a massive bubble because we only have one solution here. It's to make as much money as you can in the next 5 or 6 years. Now, I'm not saying 2030 is the absolute date, could be 2032, whatever, but we have a very limited period of time where we've been given the gift of an opportunity. Invest in our demise via the technology or invest in the new infrastructure layer with crypto. And I think as humans are replaced out of the workforce, they'll become more speculative in nature and more community driven. We've seen this testing with meme coins. We've seen it testing with NFTs. We've seen it. There's a whole bunch of ways. We are basically speed testing a future for humanity, which is based around community, maybe speculation. I mean, we've seen the rise of predictive markets. We've seen the rise of sports betting. These things have become huge, but the more free time humans have and less ability to control their income, the more likely they're going to do that, even if universal basic equity arrives. So that's why it is a very important and very real thing is we don't have any time.
The coming years are pivotal as traditional economic growth models struggle with aging populations and mounting debt. Raoul Pal sees a limited window to profit from emerging technologies like AI and crypto. For the latest crypto insights, subscribe.